SoftBank's Arm, which is now looking at a valuation of more than $52 billion in its much anticipated listing. It's the so-called crown jewel of the tech conglomerate's empire. It's offering 95.5 million American depositary shares from $47 to $51 a piece. Remember, SoftBank bought Arm for $32 billion in 2016. It's still going to own over 90% of the company when all of this is said and done. All of this said, however, this IPO is a lot smaller than it had been planned before. So what they're planning to raise here is as much as $4.87 billion. It could value the company at about $54.5 billion, as we talked about at the top end. Before, the discussion was to perhaps raise $8 to $10 billion. Right. So now looking at closer to $5 billion indicates something about maybe the demand or lack thereof for those SoftBank shares.
Yeah, and it's going to be an interesting roadshow, too, which starts off today, and we saw that release come across this morning. One of the huge things, as a reminder, you've got companies like AMD, Apple, Google or Alphabet, Intel, MediaTek, all of these companies, even NVIDIA and Samsung, that are some of the kind of joint or indirect indicators of interest, at least in purchasing about $735 million worth of the American depositary shares in this company. And so there's been a ton of focus just around this IPO and whether or not it will actually kick off some of the other unicorn or decacorns that are still waiting on the sidelines, like an Instacart, that are wanting to, or at least kind of evaluating what the public markets or the reception into the public markets for some of these mega kind of unicorns or mythical creatures out there, however you want to look at them, whether or not they could make some type of positive foray into the market, especially given the last IPO wave that we saw in 2021, large majority or a certain consortium of those really were just the SPAC craze. And then after that, you had the SPACs really sputter thereafter. And so now the environment, not just only in the equity markets and the volatility that we've seen, but also in just the amount of raise that's actually going to come forward, have largely been in question, which is why many of these companies have stayed on the sidelines for this long.
Right. I think we need to come up with a new word. They're too common to be unicorns. Zebras?
Well, no. Unicorn
Zebras are more common than zebras.
Okay, so
zebras are more common than unicorns.
The commonality should make them just like a more regular animal.
They were called unicorns because they were so rare. A privately held company with a valuation of $1 billion or more.
Yes.
Now there are a plethora of those companies.
Yes.
So they're not really rare as a unicorn anymore.
Giraffes are getting more rare. Yep. Giraffes, folks. All your markets
but not as rare as unicorns. In any case, but to your point, the lack of being able to raise as much as previously estimated, I'm sure that these other companies are going to be watching not just how much they're raising, but how they trade in their early days.
And it's a larger question, too, for some of the investors that have either taken place in early rounds for these companies or even later rounds. There was a company in Hugging Face that we were just talking to. Another company that has some of these same investors in its Series D round, where you're thinking about, okay, even as these investments are being made, there are some that need to start rolling off. And this is certainly one of them, as SoftBank's looking to cash in, as well as many of the other investors over the years.